We're working in QuickBooks Premier Retail Edition 2010. Now, what we're going to be doing today is the Loan Manager. The Loan Manager hasn't changed any in quite some time. So if you're using QuickBooks Pro or QuickBooks Enterprise Editions, you'll be fine. It's the same in all of them. How we get there is we go up to Banking. We click on Banking, come down to the Loan Manager, and click on the Loan Manager. It takes it just a moment to load. It gathers information from the QuickBooks database. You want to open it on up. Alright, once it's opened up, you'll see there's no loans in here. We're working in a sample company file today. There are no loans set up. What I want you to do first, just so you'll get some general information, is go to what you need to do before you add a loan. You click on that. It's going to open up a help file for you. Let's get that back over here where you can see it. And we're going to open that up. Get it back in here where you can see it good. Just expand it out for you. Get that out here. Alright. Now, this talks about all the things you need to do to get your loan set up. If you have an escrow account loan, you need to get that set up as well. You want to look at this. You want to add a loan to the Loan Manager. Click that. And there's some ABCs right here. Open those up. I suggest you open them up. Scroll down to C and open that up. Now go up on the print option and click print. That way you'll have everything you need. You can refer back to it later on, or you can refer back to the video. It's just as easy. But I'd rather you print this out, look over it good. It gives you exactly what you need to set your loan up. Once you're done printing that out, just close it up. And what we're going to do is I'm going to minimize the Loan Manager. I'm going to get it out of the way for now. And the next thing we need to do is set up our loan. So you've got all the paperwork for your loan. You're sitting in front of you. You're going to need it. So come over to List. Come down to your Chart of Accounts. Click on your Chart of Accounts. And I'm going to expand that out for you so you can see that. We want to get it. There you go. Alright. Now we want to add a loan. So you can do this one of two ways. There's no right or wrong. Well, there's possibly some wrong ways, but there's no one right way. There's a couple of right ways. You can come down to Accounts at the bottom left. You can go up and click New if you want to. That opens up the screen so you can add your account. Now, the loan we're going to do today is a long-term loan. It's one we're going to set up for the building that we purchase. Again, this is just a sample. We're not actually buying anything, but I'm going to walk you through it as if you were buying the building that you're in. Alright, we're going to come down, we're going to click on Other Account Types. That's going to give us the option for a long-term liability. Anything over about 12 months will be a long-term liability. You want to click on long-term liability and click Continue. Now, long-term liability should show up at the top as the account type. You want to type in the account name, and the account name is something that you will know what the account is later on when you look at it in your chart of accounts. So we want to type this in as, I'm going to call it a building loan. Building loan. Now, it's not a sub account of anything. I'm going to give it a description. Office building loan. Put the account number, your loan account number in here. That way you can refer back to it later if you need to. I don't have one. I'm just going to make one up for you. Now, the system automatically defaulted the tax line for you. This line right here, you see right here, it says mapping. If you have a tax program where you want to do your taxes at the end of the year and it's built by Intuit, which is the makers of QuickBooks, then it'll automatically map it'll map this loan into that tax program that you have in the correct location for you. We're done here now. It's in the right location. We're going to click Enter Opening Balance. Now, the opening balance is going to be the total of your loan after you've paid all your points and closing costs and everything that you financed is going to be your opening balance, the total balance of the loan. And we're going to make this up. I'm going to make it $256,400.00. And the date the loan started. Now, because I'm in a sample company file, QuickBooks defaults to the 15th of 2013. That's just the way the sample files do. But I'm going to date this back to November 15th of 2013. Okay? And I'm going to click OK. Now, how do I choose the right tax line? That's actually a different tutorial, but like I said, that gets into mapping into your tax account, your software for your taxes. If you use an accountant, they may want it in a certain spot. Chances are they're not going to mess with it. It's going to be right there. And it gives you the amount of your loan and the date of the loan on your opening balance. Click Save and Close. Alright, now you see up at the top you got a long-term liability. Actually, it's not at the top. Well, it's top for me. Long-term liability. Now you'll see on your opening balance equity, it changed according to what equity you already had and your addition to the long-term liability. Now this equity will also change as you pay down the long-term liability. You'll note it's a negative right now because the long-term liability is so much, but it adds up all your liabilities and your equity and puts it into your equity account. That way you know what your net worth is as you go. Completely different tutorial in its own, so we won't go there for now. Now we're ready to create another account. Now I like to right click and click New. Like I said before, you can go down to the account and click New, but I'm a fan of doing a right click. It's quick, it's easy, and I do it all the time. Click New. Now what we want to create this time is our interest expense account for our loan. Now this is going to be an expense. Click on Expense, click Continue. Now it's got the expense up there. The account name, we want to click Building Loan Interest. That way we'll know what the expense is. And it can be a sub-account of, we should have some expenses in here, interest expenses, right there. It's a sub-account of interest expenses. The way it breaks it down for you, your accountant will appreciate that for you if you do that for them. The description. Oop. Alright, interest, it should be interest on long-term office building loan. Down here at the bottom you see it did not map that for you this time. It had no idea what type of account it was when we brought it in other than expense. So you want to create this mapping, that way you won't have to set that up later. And this is going to be down toward the bottom. And it comes into, let's see, interest expense right there. Alright, now that's done, that's set up, and click Save and Close. Now we have one more account we need to open up for this loan. Because this loan has an escrow account, we need to create an escrow account in our chart of accounts. Now the escrow account, I'm going to do it the same way. I'm going to right click, I'm going to click New. Now this can be confusing if you're not used to accounting. An escrow account actually belongs to you until the end of the year when it's converted into an expense. So for now the escrow account is actually a short-term equity account for you. So what we want to do is we want to create other account types and create other current asset. I said equity for you a while ago, I meant asset. Other current asset. Now you can see right here it tells you what other current assets are: loans from your business, prepaid expenses, employee cash advances, inventory, things like that. Now, it means loans from expenses that are less than a year old, something you're going to pay out in less than a year. This is what you're going to do. You're going to pay this account in less than a year. When your taxes come due, your insurance comes due on the building, you're going to pull it from your other current asset account, which is your escrow account, and you're going to turn it into an expense at that time. That is a journal entry. You do that at that time. So click continue. Account name. We're going to call it building loan escrow. And escrow account for office building. All right. You should have an account number for this. After all, it is going into an account somewhere, so put your account in there. Again, I'm just going to make one up, and it's other current asset. It already knows what it is for you. Enter opening balance. If when you set the loan up, if you had to put money in the escrow account, then you've got an opening balance. You need to go ahead and put that into the enter opening balance. If you did not have to put any money in the escrow account when you set the loan up, then you leave it as zero. For the purpose of what we're doing today, I'm going to leave this at zero, and I'll show you how you get your money in there later on in this tutorial. So we're going to click Save and Close. You'll see it put the building loan escrow account up there as the other current asset. Right now it's at zero. We didn't have an opening balance. If you did, you should see your amount you put in right there. Alright, there's one other thing we need to mention before we go back to our loan manager. Now, the loan is made out to your bank, obviously, or a mortgage company, whoever it is, and they're not in your chart of accounts. They're also not in your vendor list. They're not a customer. So you've got to pay the check to somebody, and you've got to have them set up in QuickBooks in order to do it. So because they're not a vendor, they don't supply you with anything, they don't supply you a service or inventory or anything like that. They go into what we call the other names list. Now, how you find that is you go up to list, click on list, and you come down to other names list and click on the other names list. Now, you'll see in this sample company file there are no other names in here. So this is where we add the bank for you. And I'm going to just right click new. I tell you, I'm a big fan of right clicking. Name, the name of the bank or the loan company you took the loan out at. For this purpose, I'm just going to type in, let's see, Sea Island Bank, and I like to copy and paste, and type in your contact, whoever your contact name is right here. Type them in. I'm going to do it for you so you can see how it works. Joe Smith. He comes up at the bottom. The address details, we want to put those in. 1234 somewhere. Oop. Let's do that right. Somewhere Avenue and Longport City in Georgia. I don't know. 30458. And I'm going to capitalize that just so you see it works right. Click OK. The phone number is, I'm going to just put it in here just so you see it. And fax number. Put alternate number in there, alternate contact. Put their email address in there so you can email them. And the account number, I don't know. Put the account number of your loan in there. So we got all this information set up. I put it in there because it's going to show up later. I'll show you when it shows up. You'll need it in here. You'll need it correctly. I tell you, if you don't put it in there, folks, you're going to need it one day and it's not going to be there. Put it in there. QuickBooks will save it for you. Use QuickBooks as your database for everything and you won't have to go anywhere else. So tell it okay. Now that's set up. You can even add notes to this if you want to, that's a whole different tutorial. We'll get into that later. So every account you need right now is set up for the loan manager. So let's go back to the loan manager. I'm going to close out this list, close out the chart of accounts, and the loan manager opened back up for me. Now, here's something I'm going to show you, because if I don't show it to you, it's going to happen to you later, and you're going to wonder what you did wrong. The loan manager has been open this whole time we've been adding information. Now, the loan manager acts like a mini program in itself. So it actually pulls the data out of QuickBooks database and pulls it into the loan manager when it opens up. So if the information is there when you open up the loan manager, it's there whenever you go to add the loan. If the information is not there when you open up loan manager, it's not there when you go to add the loan. So the information we put in was not there when I opened up the loan manager a while ago. So just to show you what I'm talking about, I'm going to click on add a loan. Now the account name should be the building loan. If you click the drop down, you'll see the building loan is not in there. Okay? And the lender we set up was Sea Island Bank. And we come down here to the S's, and you'll see Sea Island Bank is not in there. Now that's because the loan manager was running when we set them up. So all we need to do is just cancel out of this information. We're going to come down here to the bottom. We're going to close the loan manager. It closed. Now we're going to go back up to banking, back down to the loan manager, and open it back up. Now you see it pulled all the information that was in the QuickBooks database into the loan manager that time. So our information should be there this time. So click on add a loan, click the drop down, there's the building loan, click the lender. The lender is Sea Island Bank. There they are, Sea Island Bank. The origination date, that was November 15th. Put that in there. 256,400. 360 months. And click next. Due date of next payment. We're going to make that this month on the 15th. Payment amount. Your payment amount should be set up in your document system there for you, so that you know how much it is. You enter in your payment amount. Payment amount here, I'm going to enter in 1516. Next payment number, number 1. Payment period is monthly, or however you need to set it up, annually, semi-annually, weekly, whatever you set your payments up as. Does the loan have an escrow account? Yes. The escrow payment, we calculated the escrow payment was going to be $300. That takes care of our taxes and our insurance for the year. Escrow payment account, we need to select the account it goes in, building loan escrow. Total payments, $18.16. Alert me 10 days before payment is due. I suggest you leave that checked. That way you'll know. You won't be late. And click next. Interest rate. The interest rate you got. Because I want to show you something else later, I'm going to make this at 6.5 interest. Compounding. Now I'm going to put exact days. The exact days, the option should be on your paperwork, whether it's 365, 365, or 365, 360, whichever way you set up. The payment account is going to be coming out of your checking account. The interest expense account, we set that up. That's going to be coming into the interest expense. Let's see, interest, building loan interest, there it is. And fees, charges, expense account. That's in case you have any late fees or anything like that. Which account you need to set up which account they go to as well. Bank service charges. Alright, and click finish. And there's our loan. Now people say, well, why in the world do I want to go through all that trouble just to set that up so I can see it at the end? Well, it's easy to make a payment. When it's time to make that payment, you come in, you set up a payment. It's a regular payment. The building loan, Sea Island Bank, comes out of your checking account, shows you the principal that you're paying, the interest that you're paying, any fees or late charges that you may have, the escrow amount that you're paying, the total plus the total payment for your escrow, $18.16, and you want to write a check or enter as a bill to pay it later when you pay all your bills. Now I'm just going to leave it as write a check, and I'm going to tell it OK. It comes up, fills out the check for you, puts in the check number, the next check number, the date the loan is supposed to be paid on, which is the 15th, which is where we're at right now. It puts all your banking information in right here that we typed in a while ago. Remember, if you hadn't typed in it wouldn't be on here. And folks, if you print checks and mail them with the windows on your envelopes, this information needs to be there. So, and then it breaks down your loan down here at the bottom and which accounts it needs to go into. That way your accountant knows where the money is at. The building loan escrow will build throughout the year, and at the end of the year, this amount right here, even though it'll be $300 when you write the check, the chart of accounts will show how much you actually have in the account, so that you can actually pay your insurance and your taxes on the loan on the building. So, and we can click Save and Close. And the next time you go to set up a payment, it'll tell you payment 2. I want to cancel it. I just wanted to show you what it was going to do for you. Keeps track of it all for you. Gives you a summary where the lender's at, who it is, the account number, the date of the loan, the original amount, everything it shows you right here. Now, if you want a payment schedule, you can click on it. It tells you what your principal is throughout your loan, the interest throughout the loan, gives you all that information. It's vital for your business to know this information. That way you can adjust accordingly when you need to. Now, if you need to go and find out who it is, you got your contact information. All that information to the bank is right there. We talked about putting it in earlier. It's there if you need it, all under the loan manager in one spot. It's the best thing you can possibly do for a loan. You may have 4 or 5, half a dozen or more loans up here. In order to keep track of them all, you just click on the loan that you have, and the information is there for you. Now, I'll tell you another good thing about the loan manager. You have down here at the bottom, what if scenarios. Click on that button. What if I change my payment amount to the building loan? Well, your original payment is $1,516. That's without the escrow, but I'm going to add $100 to it, make it $1,616, and calculate. Boom, there it is. I tell you what, the total payments is going to equal, instead of $660,682 and some change, you're going to get all the way down to $586,561 and some change. You're saving close to $100,000. Well, that's not close to $100,000, but not far from it. I tell you, you're right there at 660 and 586. You're $26,000 shy of being $100,000 right there. And it's all this interest is what it is. That's how much interest you're going to save by just making the extra $100 a month payment, and it gives you your balloon payment at the bottom. And I tell you, that's the best thing you can possibly do. Now, what if I decide I want to refinance my loan? All the information's over here. Let's say we paid this thing down by $10,000, make it 46, and your term's going to be the same, 360 months. You're just starting over, and your payment amount, let's just keep the payment where it was, $1,516, and payments monthly. The interest rate, remember I told you I was going to show you something earlier and I left this at 6.5. well, I'm going to make this 4.5, and the next payment date, and I'm going to make it the same as that, 1/15, and calculate. Now, what did that do for us? Total payments of $380,000. Now you got to remember, you paid it down by $10,000, $380,000 in total payments, $660,000 in total payments over here. Your total interest is way down. You know, your total interest that you're saving here is over $270, close to $270,000 in interest that you're saving. I tell you what, there's no balloon payment here. That shows you exactly the power of the loan manager and what you can do in the loan manager and calculate it. Now, this isn't going to change your loan. If you want to save this information, you'll have to hit the print button in order to save it. but it just shows you what it could be if you decided to do that. And you can set them up that way. There's different things up here at the top. What if I change my interest rate? How much will I pay with a new loan? Evaluate two loans. All this is within the loan manager. You can do it all side by side right there. I tell you, this is one of the best things you can do for a loan. I use it all the time. I always tell people to use it. They never know about it. This is one of the secrets in QuickBooks because people just don't know about it. I use it. I suggest you use it, and it'll treat you well. It'll help you in your business and keeping track of all your loans. I'm Curtis Frymouth, and thank you for watching.